Well, it's about 10 o'clock. The B period opened up a few minutes ago. We had a big gap up. Even though the Globex tested 13.15, now we're about 40 points higher, 35 points higher. So, we're going to watch the market and see what the first hour or so does. And we'll take a position, see if we can find any selling opportunities in here. Would have been nice to sell the 50 area, but I woke up just a little late. In fact, we're going to take 47 and a quarter short. 47 and a quarter. On this is 54. And we're bouncing around. We bounced down to 45, bounced up to 48. Our target on this trade is the 8-period low at 38. I wanted to talk about the swing trade. The swing trade was over the last days was an interesting trade. I don't think I'll ever consider trading a swing time frame. It's easy to get lackadaisical and you just miss all sorts of opportunities. I much rather prefer to be an active trader. Although it was sort of interesting to work on, although I wasn't working on patience, sort of interesting to, see the patience required. One thing for sure, if you're a swing trader, you have to have extraordinarily large stops. The Globex is volatile, not volatile in the sense, during any particular period, but just the range is wide because the volume is so sparse. That was my general feeling. We were looking at some scalping trades while we were taking those couple days off from active trading. And I think scalping is really interesting if you have the right tools. Right now I don't have the right tools, but there are some tools out there that allow you to take advantage of spreads and just really interesting stuff. Depth of market is analyzed with inventory. It's almost like real-time COT inventory with risk right all in one software package. But for now, we're going to stick with what we know the best, and that's the application of market profile theory with volume and price charts. I think we're going to reverse this trade. I think we're on the wrong side of this market. The question is, we had a chance to reverse it at 47.50 when I started to realize that some other components weren't meshing. We're going to reverse here at 49.50. Take the 49.50 to go long. So we took a few point loss on that. Now we're long the market. I hate to be long, 40 points, 30 points above, 40 points, 30 points above the close yesterday. It's usually not the way I trade, but the financials are strong, and the NYSE ticket strong. So we'll do that. And our stop is going to be below 44. 45.50 is our stop. That's a little closer than I normally put it. Based on the last selling bar, the NYSE tick on a 5-minute basis. Low of that bar is 45.50. I was actually going to put it below the volume cluster, which is 45.50 is the low statistically high volume bar at 45.50. 11,288 went off that price. Then you can put it at the bottom of that B period bar, which is 43.50. But if it breaks through that, then if it hits 43.50, it's probably going in the other direction. So we'll keep it at 45. We'll change it to 45. Put it 2 ticks below that. 45 is the stop. Our target here is on this trade is up near the gap between 60 and 65. I'm glad we were able to see the error in that trade and reverse. That was pretty good. We could have done better though. We could have saved 2 more points. I was thinking of reversing at 47.50. Could have got filled at 48, but 49.50 was the right decision, I believe. Looks like this market's going to attempt to, fill this gap. Well, we're moving in the right direction. We have 2 points of resistance above us. We're in that value area of the last time we attempted to fill the gap. So the probable course is an attempt to fill the gap. So, and there's a lot of volume building today. We're statistically high across just about every time period. I'll review that in a minute when I pull the chart up. But what was interesting was, we tried when we sold the 47 and a quarters, we sold the second standard deviation run at about 10 o'clock, 10:05. See the exact 5-minute chart. It was time was 10:05, and that trade actually worked for maybe a 4-point gain, 3 or 4-point gain. I was considering taking a 2-point gain, but didn't. And had it been a real short time frame, and you'd have to get in when it hit the second standard deviation. But I'm looking forward to maybe some resistance up there at the 60 area, that A period high of the other, or the G period high, I think it was, of, I'm not sure what day it was. Don't have the right chart up. But anyway, that 60 to 64, 65 area is an area of interest. Well, the statistical high volume, get my cursor over here so you can see the price action. There we go. The A period column, we had 200,000 plus trades with a 12,000 delta positive. Statistically high volume for that, I just lost the chart, is 196,000. So we're above the statistically high range for the A period column. The B period column is 214,000 with an 8,000 positive delta, compared to 182,000 statistically high volume. The C period is 207,000 with a 25,000 plus delta. Statistically high volume for that period is 145,000. That's the period that just ended at 11:05. We just closed that period, 10:30 to 11. And the D period we just opened up, statistically high volume is 123,000. Of which we're building approximately 14,000 with a 3,000 positive delta. So I wouldn't want to be short this market, at least up to the close of the gap. Then we'll reconsider, look for maybe a short or a retracement. Or maybe not. We'll just have to see what the volume is. The financials are lagging on this move up. That's a concern. That's a real big concern. The S&P's made new highs, but the financials haven't even attempted nearly a new high. And the NYSE tick now is starting to calm down a little bit. We're getting out of this trade. 54 and a quarters, 54s, we're out. We'll look for another entry later. The financials catch up a little bit. We'll look to the afternoon session now that we think the market could be forming a top here for the time being. Maybe it needs to retrace back down to the 40s before it can rally this afternoon to attempt to close the gap. But the XLF is, like I say, not making higher highs as the mini S&P is, and that's a pretty major concern. So we're going to take the 55.25 short, 55.25. Well, we might have got out of the 49.50s just a little bit early, because we got up to 56, but I think the 55.25 short is the right position for the afternoon session especially. We don't have a huge target on the 55, maybe we'll target down towards the 50 area. Should be able to get down to the E period low area. Our stop on this trade is 60, that's above us a bit. It corresponds to March 21st. The I and O period is 60. That's above the L period on March 25th, 5 points, which is above, the IOKM period of the same day, which is where basically the top was before we sold off. So we'll see how much we can maximize this trade for. The low of the E period is the first period I'd be looking for some stopping point. We're going to move our stop down to 56.75 because this market didn't break as quick as we anticipated, and the XLF is catching up a little bit. It's not making higher highs, but it's working toward that direction. So our stop is we'll make it 57 even. Well, that was quick. We got stopped out. And the XLF is still not making higher highs, but it's catching up. That trade didn't work out. That sucks. Now we need to look for a re-entry on the long side because everything now is pointing toward that. But I hate buying the highs, but there's not a lot of retracements. So our exit on that 49.50 long was 54. So that's the area that I'd like to get back along, so I don't sacrifice too much. XLF is still not making higher highs though. That is still a concern. We're gonna take the 55.75s. 55.75. We'll reduce this snippet long. 55.75.